The prospect of a life where one's time is entirely their own, unburdened by professional obligations, is often seen as an unattainable ideal. However, this reality is achievable through a structured and disciplined investment strategy. For several years, I have not relied on a traditional salary. My expenses are covered, and my net worth continues to appreciate. The anxiety of being confined to an unfulfilling career is a significant challenge for many. But there is a viable path toward financial autonomy. In this video, I will delineate the 5 fundamental steps I employ to construct an investment portfolio that fully supports my lifestyle and explain how you can begin this process, irrespective of your starting point. Number 1. Find your freedom number. The foundational step in this journey is to define a precise financial target. This is your financial independence number, the total capital required to fund your annual expenses indefinitely. A widely recognized guideline for estimating this figure is the 4% rule. It suggests you can safely withdraw 4% of your portfolio's initial value in your first year of retirement, adjusting for inflation in subsequent years, with a high probability of the funds lasting for at least 3 decades. It is important to recognize this as a guideline based on historical market performance, not a guarantee for all future scenarios. The calculation is straightforward. Determine your desired annual post-retirement spending and multiply it by 25. For instance, an annual expense of $40,000 necessitates a portfolio of $1 million. This calculation transforms an abstract aspiration into a tangible, measurable objective. Number 2. Become aggressively consistent. The most significant factor in wealth accumulation is the principle of compound growth. Its efficacy, however, is entirely dependent on consistent contributions over extended periods. The most effective method to ensure this is through the automation of your investments. Arrange for automatic transfers from your primary bank account to your investment vehicles on a regular schedule. Whether the amount is modest or substantial, treating it as a non-negotiable expense removes emotion from the process. This disciplined practice, known as dollar-cost averaging, ensures you are continuously investing, which can reduce risk compared to attempting to time market fluctuations. The benefits of starting early are profound, as an additional decade of compounding provides a substantial advantage. Nevertheless, the optimal time to begin investing is now. 3. Build your freedom portfolio. The destination for these automated contributions is a carefully constructed investment portfolio. The core principles for this portfolio are diversification and cost efficiency. Spreading capital across various asset classes is essential to mitigate risk. For the majority of individuals pursuing financial independence, the portfolio's foundation should consist of low-cost, broad market index funds or exchange-traded funds, ETFs. These instruments provide immediate diversification by holding securities from hundreds or even thousands of companies, such as those within the S&P 500 index. The objective is to capture the returns of the entire market rather than speculating on individual stocks. That a typical long-term growth portfolio will be heavily allocated to equities, which have historically yielded the highest returns. Asset allocation might follow a 60-40 or 80-20 model of stocks to bonds, contingent on one's risk tolerance and time horizon. Crucially, selecting low-cost funds is paramount to prevent management fees from eroding investment gains over time. Developing a comprehensive understanding of these principles is a critical part of the process. For a more detailed analysis of specific investment strategies and ongoing insights into wealth creation, I invite you to subscribe to the channel and activate notifications to stay informed of future content. 4. Accelerate your timeline. Once your automated investment system is operational, the logical next question is how to expedite the timeline to financial independence. The direct answer is to increase your savings rate. This can be achieved by increasing your primary income or developing supplementary revenue streams. Every additional dollar allocated to your investments effectively shortens your time to retirement. As your income increases, it is vital to resist commensurate increases in lifestyle spending. Instead, channel that additional income toward your investments. Widening the margin between your earnings and expenditures is the primary lever for compressing your working career. Point 5. Live off the income. Upon reaching your target portfolio value. The strategy shifts from wealth accumulation to wealth distribution. At this stage, you begin to live from the proceeds of your investments. The 4% rule transitions from a planning target to a practical withdrawal strategy. Your diversified portfolio is structured to generate returns through a combination of dividends and capital appreciation. Regular income can be drawn from dividend-paying assets, creating a cash flow similar to a salary. Concurrently, a systematic plan for selling assets in a tax-efficient manner is required, prioritizing withdrawals from tax-advantage accounts like a 401k or IRA, where applicable to IT, is also highly advisable to maintain a cash reserve equivalent to 1 or 2 years of living expenses. This liquidity buffer is critical as it prevents the forced sale of assets during a market downturn to cover ongoing expenditures. To summarize the 5 steps, first, calculate your specific freedom number using the 25x expense rule. Second, implement aggressively consistent, automated investments. Third, construct a diversified, low-cost portfolio centered on broad market index funds. Fourth, accelerate your progress by increasing your income and savings rate. And fifth, establish a structured withdrawal strategy for living off the returns. This methodology is not a rapid route to wealth, but a disciplined and proven path toward financial sovereignty. The reward for this diligence is the ultimate form of freedom. Complete ownership of your time and the autonomy to live by your own design. If you found this information valuable, please like the video and subscribe for more content on achieving financial independence. Now is the time to take the first step.